I mean, look, silver was 30 bucks in May, just over it. Now it's $106 and climbing. It's changing people's lives. It's very surreal. And gold too. Gold's up 60 bucks since the open here. It's Sunday night. You can only manipulate a market, and it's not debatable any longer. It isn't, that the market has been suppressed by Western central banks for various reasons. Gold for one reason, silver for another. In the overall scheme of things in London and on COMEX, and they came out 3 weeks ago and sent a letter to all their investors saying, we believe silver's devilish blow off top, always framed in a negative connotation, very heavy. Like, I invested $300,000, a lady said, I was just telling you downstairs, she said, I flew here to meet you. In tears, couldn't speak, like she couldn't speak. And she said, I flew here to say thank you to you that I'm a millionaire now since May, and I put my life savings in because I listened to you. Of course, it's being better than chased with pitchforks, 8 of them in silver, 8. One or two in Canada, 3 or 4, 2 or 3 in Europe, and 5 or so in the United States, have maintained the largest concentrated short position of any commodity ever traded in the 1,000+ commodities on COMEX ever. I mean, look, silver was 30 bucks in May, just over it. Now it's $106 and climbing. It's changing people's lives. It's very surreal. And gold too. Gold's up 60 bucks since the open here. It's Sunday night. Gold and silver are being repriced. You can only manipulate a market, and it's not debatable any longer. It isn't, that the market has been suppressed by Western central banks for various reasons. Gold for one reason, silver for another. I argue gold because of something called Gibson's paradox, the inverse relationship between real interest rates and gold. This is how you support the illusion of strength of Western supremacy in bonds and currency, and the military-industrial complex needing wicked amounts of silver to make high-tech weapons. That's why they've suppressed it. And for years, no one ever challenged. No one stood for delivery. But many of the countries that, when I was a kid, were third world, such as China and India, are now leading the charge of physical delivery. And not only that, they are coordinated, they are motivated, they are sophisticated, and they are wealthy. And they understand that this is a rush to accumulate metal. And in an environment where paper prices dominate and rule and no one challenges the West, it's changed very rapidly too. He who has the commodities, or she, who has the commodities wins.
Schectman frames the $30 to $106 silver move not as speculative bubble, but as structural regime change, the end of Western price suppression through paper derivatives. Gibson's paradox, inverse relationship between real interest rates and gold, explains why gold was suppressed to maintain the illusion of Western financial strength. Silver suppression served military-industrial complexes' voracious demand for advanced weaponry, hypersonics, stealth tech requiring silver's unique properties. The BRICS pivot is crucial. China and India, former third world nations, are now sophisticated, coordinated, wealthy actors demanding physical delivery and refusing to play the paper game. Rehypothecation, selling same contracts repeatedly, only works when no one demands delivery. Once delivery demands exceed physical supply, prices must adjust to reality. The repricing is inevitable mathematical outcome of fractional reserve commodity banking meeting full reserve physical demand.
And stand for delivery. Case in point, TD Bank, who's very short in the overall scheme of things in London and on COMEX, and they came out 3 weeks ago and sent a letter to all their investors saying, we believe silver's devilish blow off top, always framed in a negative connotation, has reached its peak and is heading towards $40, told everyone to short. We are going largely short, they say. We believe silver's heading to $40. They got stopped out last Friday at $92 at a huge loss to them. And these things, raising margins, rhetoric, negative rhetoric, telling everyone we're going short, lease rates expanding, none of this stuff, which always would have crippled the market as it did in 2011, it's not working now. And prices are just running. And people who have been ridiculed by friends and family, by financial advisors, what the hell do you want that stuff for? It doesn't pay interest, they say. Why would you buy that? Are finally being vindicated. And it's a lonely feeling, Charlotte. The people who come here like to talk because they finally have people around them who understand that they're like-minded and get it, and they can have real conversations. Whereas I go into Thanksgiving dinner, my wife says, don't you dare say a word as we're walking in the door, not one word, because I want to stay through dessert. She'll say to me, I'm okay, I won't say a word. But the point is, the public hasn't received the message. The people who have been here year over year have, and have done have invested accordingly and have felt isolated, alone, wondering if they made the right decision, and to see what's happening now, which is a function of mathematics and logic, which always seem to work out over time. You can't hide from Mother Nature, nor can you hide from mathematics. You can run and you can inject variables and you can do all you can to evade, but just like Father Time, it catches us all, as does mathematics, as does Mother Nature. When you suppress interest rates the way the West has for a long time to create this illusion of wealth.
TD Bank's catastrophic short position epitomizes the old regime's collapse. Their letter calling silver's move a devilish blow-off top at $92 heading to $40 reveals desperation. Banks caught massively short trying to create bearish sentiment to cover positions. The language choice, devilish blow-off, frames natural price discovery as speculation to be shorted. Getting stopped out at $92, silver proceeded to 106 plus, means staggering losses on leveraged short positions. Most importantly, the traditional suppression tools, margin hikes, lease rate expansion, negative media, coordinated shorting that crushed rallies in 2011 no longer work. Why? Because physical demand from sovereign actors overwhelms paper manipulation. This vindication moment for stackers, ridiculed by mainstream advisors, shows the psychological toll of being right early. Years of being called crazy for owning barbarous relic that doesn't pay interest, finally ending.
These distortions that have affected metals prices for so long are now, in my mind, finally being exploited through delivery. And what's really interesting is that the biggest money in the United States is standing for delivery at levels no one has ever seen. And that's manifesting into much higher prices. And it's really heavy to see the people here, I mean, some of them in tears, saying my life has been changed forever. It's very heavy. Like, I invested $300,000, a lady said, I was just telling you downstairs, she said, I flew here to meet you. In tears, couldn't speak, like she couldn't speak. And she said, I flew here to say thank you to you that I'm a millionaire now since May, and I put my life savings in because I listened to you. Of course, it's being better than chased with pitchforks, but I will tell you it's very surreal. I've done this for 36 years. I've been coming to these conferences for half that time. Not only is the amount of people here exponentially greater, but the vibe is surreal. And you know what? I just want to say to people, in a market that's moved as fast as this has, short-term caution is always prudent, right? Nothing goes straight up without taking a breather, but you can still coexist, that can coexist with long-term bullishness. And I am hugely long-term bullishness, but yeah, anytime things move to this level, got to be careful. But I'll tell you, to your question, it's so far different than anything I've ever seen. It's absolutely off the charts, and it's very surreal.
The emotional weight of this segment captures something profound. People's lives genuinely transformed by the repricing event. The woman investing $300 and becoming millionaire since May, 7 months, represents 233+% returns, but more importantly, vindication after years of ridicule. Schectman's acknowledgement of better than being chased with pitchforks reveals the industry's dark history. When gold, silver underperform, dealers get blamed. The 36-year veteran saying this is so far different than anything I've ever seen validates that this isn't normal volatility, it's structural repricing. His balanced message, short-term caution coexisting with long-term bullishness, shows professionalism. Yes, corrections happen, but the secular trend is established. The biggest money, taking delivery at unprecedented levels, isn't speculation. It's institutions and sovereigns recognizing paper's failure and demanding physical. When the smart money moves this decisively, retail should pay attention.
Well, it's being repriced in the respect that you're finally finding equilibrium between real supply and demand. Unfortunately, the market has been controlled by paper derivatives, where the ability of the Western banks, 8 of them, in silver, 8. One or two in Canada, 3 or 4, 2 or 3 in Europe, and 5 or so in the United States, have maintained the largest concentrated short position of any commodity ever traded in the 1,000+ commodities on COMEX ever. Let me say that again. The largest concentrated short position of any commodity ever traded on COMEX. Why? Why? And to me, That's the first question. And the answer is, in my mind, because of the military-industrial complex. The West has ruled the world through strong military. The amount of silver needed in high-tech weaponry, from cruise missiles to F-35s to stealth bombers to submarines, nuclear submarines, all this stuff, and these really, really high-tech weapons now that are going Mach 3, Mach 5, whatever they are, the hypersonic missiles, the heat that is generated in the cone of the missiles is so extraordinary, the only thing that works is silver. And the military-industrial complex doesn't care about the price, right? Because if you need 500 ounces in a high-tech weapon, cruise missile that sells for $20 million, what the hell do you care what the price is? It's more along the lines of the rest of the world understanding how important and vital it is in everything, not just military, digital, electronics, you name it, let alone the monetary aspect of it. What I think the only thing people need to understand, and I will say this to you all, the only thing you need to understand is who the hell is standing for delivery every single month on COMEX, every month, for billions of dollars worth, billions upon billions upon, in December. It was the largest delivery in the history of the COMEX market for silver for a December contract, like 65 million ounces. So far in January, which is not a primary delivery month, we're over 40 million. So in the last 40 days, we've seen, 120 million ounces nearly stand for delivery. Who's doing that? A mint box of Silver Eagles is 42 pounds, 500 ounces. Who's buying 110 million ounces? And I think when you understand this, when you look at the deliveries off of the LBMA and the massive deliveries off of COMEX, what I would say to you is that the most well-funded, but more importantly, Charlotte, the most well-informed. People at that level don't do this for the hell of it, right? If you're dropping billions and billions, do you not think you know where it's going? Are you not really connected to the inside when you're spending that kind of money? And I would argue it's not a one-off. It's been every month since Trump won the election. And then what do you know? Silver is now a critical mineral, as now reclassified by the government. And what do you know? They just said, we will put state-sponsored price floors underneath all critical minerals within the next 90 days. That was a law that was just passed last week. That is to incentivize domestic mining of all of these critical minerals because, you know, prices are where they are. If there isn't a floor at a high enough level, you can't incentivize domestic mining for things that are becoming harder to find. And then they just came out and said, now there is a proposal in front of the House and Senate. It's cleared one of the chambers. I think the House has to now pass the Senate, saying we need to build a strategic stockpile of all of these minerals. What you are seeing is not two brothers in 1980, the Hunt brothers, trying to corner a market where same environment, they see way more paper than bars, and they're supposed to be one-to-one. Well, wait, if I buy all these paper contracts, but there's not as many bars back there, well, what if we stand for delivery? What happens? Price goes way up. Well, the exchange changed the rules on the Hunt brothers. They said you can't be that long, but you can be short as much as you want. They had to sell the contracts. 2011, it was about leverage and the leverage, that speculation. So what did they do? They raised margins a bunch of times. And if you raise margins on the COMEX, meaning you have to have more in a margin account than you did the day before, they keep raising until the people who are on margin are forced to sell, which drops the price, which begets more selling, and the price collapses. Didn't come back for 15 years. On Christmas Day, about a week before this year, they raised margins. On Christmas Day, you needed $21,000 in your margin account to hold 5,000-ounce silver contract. Silver was $60, roughly, on Christmas Day. The next day, they raised it by 30%. If you don't pay, we're going to unwind and liquidate your account. So now you have to put $47,000 in your margin account. $27,000 in your margin account. The reason I said 47 is today it's $45,000 an ounce to control 5,000 ounces. A company like mine will have 2 million ounces of silver at any given time. If it costs $45,000 to hedge my exposure, meaning the margin account means I short 2 million ounces on paper, on COMEX. I have 2 million here, I short. If the price falls by $10 an ounce, I'm down $20 million. I'm out of business. But what I sold short goes up by the exact same amount. But in order to maintain that position, I have to have $47,000 per 5,000 ounces. You have to have millions. That's before the gold, 35 or 36,000 for one 100-ounce gold contract. Well, what that does to the speculators, the people who might be very wealthy, but they're not wealthy like sovereign central banks, sovereign wealth funds, Tesla, Samsung, Sony, who don't play on margin, these people get shook. And all of a sudden they have to sell to cover the margin requirement. Maybe they have 50 contracts and they have 20 million in their margin account. And all of a sudden the price jacks way up on margin, and the price of silver is moving up $7 on Friday. It's up right now, and just as the market opened in Asia, it's up $3. They're going to get margin called again.
This is the smoking gun explaining decades of silver suppression. The military-industrial complex's insatiable demand for silver in advanced weaponry. When hypersonic missiles traveling Mach 5 generate extreme heat, only silver's thermal electrical properties work. An F-35 requires significant silver. Cruise missiles need 500-plus ounces. Submarines and stealth bombers are loaded with it. At $20 per missile, the Pentagon doesn't care if silver is $30 or $100, but they do care about supply availability. The 8-bank concentrated short, largest in COMEX history across 1,000-plus commodities, wasn't profit-motivated trading. It was strategic price suppression, ensuring military access to cheap metal. The question, why is this the largest short ever, has only one logical answer. National security demand required price control. Now that China, India, and global actors understand silver's criticality, not just military but all advanced technology plus monetary role, they're competing for finite supply, breaking the suppression regime.
You know, we'll take the 50 million ounces of silver every single month for the last 15 or 16 months. Between, I don't know, 30 and 50 million ounces of silver are standing for delivery every single month. And ask yourself, who the hell is doing that? And where's the mainstream talking about this? Why do I have to scream about it every single podcast I do? This is so far unusual. It's 4 feet of snow in Death Valley in July. It doesn't happen. And all I can tell you is that that's all people need to know, because these are the most well-informed traders on the planet who are literally standing for delivery for billions upon billions upon billions upon billions of gold and silver. Shh, don't tell the public. And the public doesn't know. The only thing they see is negative. Oh, it's overbought, the devilish blow-off, we're shorting, the top is in, and it keeps on going. And all I can tell you is that it seems to me this is being repriced, where you have assets now being repriced via sovereign demand by countries and nations who understand that it's not about dollars and promises from an insolvent country like we are holding our treasuries. Instead, it's about who has the commodities wins. And that's what's happening. You can see it if you open your eyes.
Well, and let's talk a little bit more about these big smart money players that are standing for delivery. Maybe we can just spell it out. Who is doing this?
Who the hell knows?
Yeah.
If I had to guess, it's the Exchange Stabilization Fund, in other words, the U.S. Treasury, who can do so in a clandestine manner without asking for congressional approval. It's about national security. How do they frame critical minerals? National security. So they bring it all in, they buy it all up, and they don't have to talk about it. And the bigger question is, why don't we hear about it? Forget about who it is. How about why? Where's the mainstream? Where's the Jim Cramers, these people who pretend to be looking out for our best interests? And he said gold and silver, the top was in months ago. And what do you know? We are way higher. And I've never sold gold and silver for people to become wealthy. I sell it because it is wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And the system about the dollar, since 1971, it's been about trust. We severed the gold standard. We're no longer redeemable in gold the way we were prior to that. And who trusts the United States?
The 4 feet of snow in Death Valley in July metaphor perfectly captures the statistical impossibility of what's happening. COMEX historically saw minimal delivery demands. Paper players rolled contracts forward, never taking physical. Now, 30 to 50 million ounces monthly for 15 to 16 straight months represents systematic, sustained, massive physical offtake unprecedented in market history. This isn't random. It's coordinated institutional, sovereign accumulation. Schectman's frustration, why do I have to scream about this every podcast, highlights media blackout. Mainstream won't cover because it exposes the paper market's fraud. The most well-informed traders on the planet taking billions in delivery while public sees only overbought headlines shows information asymmetry. Smart money acts, public gets narratives. The repricing mechanism is simple. Sovereign demand, nations wanting commodities not dollar promises, overwhelming paper supply forcing price to physical reality. He who has commodities wins. Follow the delivery data, not the headlines.
Anymore, whether it be institutions, And I'm a patriot. I thank God every day I was born in the United States. And I would vote for President Trump again. I thank God he's there. But who trusts us? Our institutions, the judicial system, the federal government, immigration, you name it. Who trusts these things? Who trusts our fiscal responsibility? We are creating $1 trillion in debt every 100 days. 1 trillion seconds ago was 31,688 years ago. So we pretend to be the policeman of the world, right? And military spending, which they've now increased to 1.5 trillion, is discretional. And the Congressional Budget Office said by 2031, 100% of tax revenue will go just to pay the mandatory entitlements and the interest on the debt. And those entitlements are off balance sheet, which means when you fund your military, you're doing so by selling bonds. You're borrowing money from the world to go around and police them. We are at the late stages of a system and empire based on trust, which has squandered the trust not only through weaponizing the dollar and the treasury against countries like Russia, not only through the previous administration, when you look and say, this is too stupid to be stupid, where everything that Americans were proud of, like coming to the country, all of us came from another country, our heirs did, where is there a two-tiered justice system? Are the elections fair or not? All of these things, whether or not you think they are, half the world thinks that they're not. And all of these things have eroded the trust in this nation. And so now it's going from lack of trust. Look, I'll say it this way. After World War II, the United States stood on a very high moral high ground. And I would argue we've trampled on it, not only through fiscal irresponsibility, but through our actions at home and abroad. And that is not sustainable for a country who not only is running wicked fiscal deficits every year and a debt that is compounding exponentially, where the interest on the debt is more than your defense spending, which has to be borrowed. I would just simply say we are seeing a transition where gold and silver are being reintegrated into the monetary system as a symbol of trust. And this will become a marriage between blockchain transparency and physical commodities. And it's happening. It's real. Problem is most people don't get it because the mainstream media doesn't talk about it. You do and have for years. And be honest with me, Charlotte. I'm going to ask you a question. You know, your friends who you've known forever, who know what you do, when you tell them this stuff, do they give you a blank stare? Do they say to you, what? Gold, silver, mining shares? Can you have a conversation with your oldest friends for more than 3 minutes about this stuff? You don't have to answer. Your smile says it all. And I know because I've owned a company for 36 years. They don't get it. Now they're beginning to, and they're your friends, so they listen to you, that you're smart, but the same thing is true, is that this hasn't come full circle yet where people want to acknowledge just what gold and silver represent. They've been pet rocks for a long time, but they're not anymore. And the really smart money who is spending billions upon billions upon billions upon billions every single month, quietly, it's never happened before. And that, to me, is all you need to know.
Schectman's exchange stabilization fund theory explains who has the resources, motivation, and legal authority to take billions in monthly delivery without public disclosure. The ESF operates under Treasury with unique powers. It can act on national security grounds without congressional approval or transparency requirements. Given silver's criticality to advanced military systems, hypersonics, stealth technology, ESF accumulation makes strategic sense. The U.S. government would be securing supply for military-industrial complex, while the same government's banking allies suppress prices. The irony is profound. U.S. banks short silver to keep prices low for Pentagon procurement, while U.S. Treasury, ESF, takes massive delivery at suppressed prices before the price breaks higher. The media silence isn't accidental. If public knew the Treasury was accumulating billions in silver through clandestine means, while banks told retail to short, the manipulation would be undeniable. Critical minerals equals national security justification allows entire operation to remain classified.